Okay, hey everyone, it's Michael Baltos, and welcome to the Orderflows market analysis for Monday, June 26, 2017. Durable orders were mostly negative this morning, including both orders and shipments for capital goods. And, this kind of spells a little bit trouble for second quarter GDP when that number comes out. I read a headline that said, well, market's a little changed, but actually, there was, quite a bit of movement in the S&Ps for the day. I mean, even though you see markets were quiet and little changed. If you were to look on just on the chart, you had quite a big range actually in the S&Ps. 18 points. You got this big wick here, but if you just look at the body, it's kind of a small body, a little bit up. So it looks like, oh, it's only up a small amount, little change. But actually, you did get some decent price movement during the day. So, another interesting thing was potential flash crash in the gold. I also heard fat finger caused it, but before I get into that, let me just go through a brief disclaimer. I don't want everyone get all excited and think futures trading is the way to go. It's the way to your riches. Yes, you can make money trading, but not everyone will. So this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Tools I use in this presentation are the Orderflows Trader and the Delta Scalper. So, first I'll just talk about the gold. It's quite interesting. There's an interesting article on Zero Hedge about it. It sort of alluded to a fat finger. What the fat finger refers to is a trading error. When a trader on a dealing desk is keying in an order, instead of 200 they enter 2000. That's a fat finger, and those mistakes do happen. I've had them myself, although not to the tune like this. Or sometimes I'm supposed to enter 20 lots, I enter 200. Usually I catch it. The problem that really arises with fat fingers is when people enter price as the quantity and the quantity as price, vice versa. That's usually where things get wiped out. You could research on the Japanese market. It happens every few years, a big problem, where somebody was supposed to, a few years ago, someone was supposed to enter like one lot, and they entered 19,000 lots because the stock was trading at 19,000, and they put 19,000 as the quantity and a price of 1. So they sold 19,000 down to a price of 1. Now, for retail traders, it's generally not going to happen because there's a GUI that sits on your trading system. So you can't trade outside of basically what you have on deposit with your broker. And they do restrict you. Even if you got a ton of money, you usually have a quantity limit. Every new account goes through the onboarding process, and there's a form that the bank will fill out, or the broker will fill out, which is basically your position limits and your trade size limits. So most firms, for retail traders, you can't trade more than 25 lots unless you get special approval. So maybe you could trade 50. So you're not going to have a fat finger. But when you're trading at a bank, the last thing a bank trader wants to have is basically a size, a position, not a position limit, but an order size limit. All right. There are guys, I know guys at JP Morgan sell, they'll hit the bid in the Eurodollars, not the Eurocurrency, the Eurodollars, which is, sometimes 3,000-4,000 lots aside. They'll see a bid, 87 bid for 3,500. Boom, they'll sell all 3,500 just like that, no problem. And, if they're trying to enter it and they get a pop-up that says, oh, you're exceeding your max order size limit, the order won't go through, and they'll get really pissed off, and they'll raise hell because these guys are big swinging dicks for the bank. Oh, I make the bank $20 million a year trading. I don't want to be dicking around with having to enter 1,000 lot like that. Those guys they'll make noise, and they'll get these things removed. They'll get these. Banks are not supposed to do that, right? They're not supposed to remove it. But you know what? You yell at some little guy that sits there, I'll say in a cubicle. I mean, he's got a cush office, next to some pretty girls in accounting, And and here he is getting yelled at by some guy. He said, "Fuck it, I don't need this." Okay, boom, removed. So these things, they get removed, and that's how these things happen. Whether or not this one is a fat finger, I don't know. I mean, it's 18,000 lots and traded in a minute. Normally it doesn't trade that size at that time of day. 4 a.m. Eastern time, 3 a.m. Chicago time. Europe is just, early morning. It's Monday morning. Gold, though, only sold off 18 bucks. It's only 1.5%. So it's not like it was down 5%, 6%. So, it did get absorbed to a certain extent. I mean, it's $2 billion notional. Obviously, it's going to drag down other markets. But again, that amount at that time is quite a lot, actually. So don't think, I don't know. There's a lot of conspiracy theories floating around. I did ask some of my friends, brokerage friends, if that was them. They said no. But again, can it be a central bank? Yeah, it can. Now, granted, it's a holiday in most of Asia, right? And it's 3 a.m. Chicago time. So Asia is pretty much closed. Europe is just opening. Now, granted, there was some banks having some problems in Italy, although I think I was reading somewhere the size of the position is like 300 tons, which central banks do come out and sell 300 tons. I mean, they used to, but that was like a big thing. So I don't know. I don't know what to make of this. I don't necessarily know if it's a fat finger or someone just dumping it. Just honestly, it doesn't make sense to be dumping it at that time. If someone really wants to dump a position like that, they would just wait till the time when it's most liquid. So that's why the timing of it sort of lends itself to being a fat finger. But again, you could sell 18,000 lots and only move the market 1%. That's not all that bad. I do like the comments though on some of these things. Here's there's a good comment in here somewhere. I can't find it now. It's probably gone. But I mean, I like the comments because they're the sarcastic ones. I've got sort of a gallows humor. But anyway, that said, that was interesting this morning. The other thing is, usually when you get a fat finger, this is the chart. I'm not going to pull up a chart, but this is the chart that's in this article. You can see how it's sold off from here to here, and retrace back. It didn't retrace all the way back. You don't necessarily have to, in the old days when you see fat fingers, what you would get is not only would you get the fat finger, then you'd get follow through, because stops are getting triggered, and then the market just keeps going lower, then snaps back literally right around to where it was. It pulled back to, still a little bit, still about 0.5% lower. So if it's truly a fat finger, in my opinion, you'd see the sell-off and you'd really rally back to where you were almost exactly before. But you know what? There's probably still some selling pressure in here. People got a lot of stuff getting triggered here. And on the way down, you got stops, right? And generally, when people are working stops electronically, well, everything's electronically, you got to put a limit. You're not going to just put a stop. Okay, now I know people, big traders, they don't want to miss the move, so they'll just put a stop with a very wide limit, $10 or something in gold. You think, hey, $10, I'm pretty safe. So, you're trading 55. Maybe they put a $10 limit down here at 55. That's why you see it come back up here to 55. So what you had is a lot of stops getting triggered on the way down when the selling came in, and they didn't get anything. But now they're working limit here because their stop is at 1255 or something, with a $10 limit. So when it gets down to 1245, if they don't get anything, it's working as a limit in the order book, right? That's how you see it sort of come back up around this level and just sort of hang there. That's why I think we stayed under it for a while. Again, I don't have a gold chart. I should pull up a gold chart maybe later, but it was just interesting things going around in the market this morning. That said, again, go back to the S&Ps then today. even though, I said, early on, I saw a headline saying the Dow was narrow trading range, and we ended up just posting a small gain. But when when you look at the chart, it's just really more, there was some decent movements. There was some very good movements. This is okay. Well, just really quick. This is the Delta. Sorry, this is the mini Dow, the YM. It's my 100 range chart, and there's some terrific moves here. This is the transition. I like running the transition on a 100 tick chart. Cash open, we're trading around 21,405. We rally up to 450. You got a little bit of a sell here. Then you get this nice brilliant sell here at around the 430 area right there, and you sell off down to basically down to 330. You did sort of hold steady around this 350, 360 area. You go lower, a little bit of a sell here, not much there. Back up to 385, another sell. You do rally back up here, a little back and forth. Another sell around the 390 area. Then you're just sort of going sideways the rest of the day, sideways to lower. So, there was some decent movements there. That's the transition indicator. But looking on a 10 range Emini chart, I'll say not a whole lot in the order flow. I mean, in the sense of ratios with divergences today, not a whole lot actually in a lot of the markets that I'm following. But Delta scalper is giving you a buy here, a sell here. This is a nice swing high. You can't get past it. But again, it's after that initial move up and sell off, we literally after about 11 o'clock, you just went sideways. But again, Delta scalper is given a couple signals there. Interest rates, bonds very quiet this morning. We kept bumping up against this high here at 08. Couldn't get past it. Boom, boom, boom. All these divergences. Here you got a ratio of divergence. Here you got the Delta scalper sell at the same level a few times. Finally, late in the day, you came off. But again, you get it once, twice, 3 times, 4 times, 5 times before finally making that move lower. Again, am I going to say, oh, you had Delta scalper, Delta scalper sell here? Yeah, you had one here. Did the market react? I could say, yeah, look at it. You could have sold it here and covered down here. No. To me, the market didn't move. It's just going sideways. Here, at least you got, a ratio and divergence, but, you came right back up to that high, and then you sold off. But again, this is a very slow moving day. This is at 10. It doesn't make the move till 12. I don't think I'd have that patience. 5 years. Let's find my 5-year chart. Here we are. Kind of similar. We rallied up from this low, 4:30 in the morning. You hit the high, came within a tick of it here. It's a divergence, not a ratio. It's close to, if I was using 0.75, it'd be a ratio, but I use 0.7, so not technically a ratio. Got back up within 1 tick, got back up within 1 tick, got back up within 1 tick. Delta scalper here, price rejector there. But again, it's today would have been one of those days where you are just sort of spinning your wheels, thinking, fuck, man, today's trading sucks, because there's not a whole lot of great trading opportunities. The Eurocurrency, just really quick, I'll just show you on a bar chart. I'll get into the order flow chart in a second here. Then you had a signal here, didn't work out, came right back up, and you got a nice signal here around the 112.60 area. Sold down till you got the next buy here around the 112.40 area. But by this time, it's already almost 12 o'clock. But on the order flow chart, this is how it looked this morning. Not this is that sell that didn't work out. Again, not much in terms of ratios. You have a divergence there. Nothing. I like ratios with divergences, not just divergences by themselves. Here's that Delta scalper given a sell. Again, we rally right up near the high, start coming off. Delta scalper given the sell. and you get the delta scalper buy there. Not a whole lot really other than the delta scalper. I mean, that's why I create tools like the delta scalper, because honestly on boring days it's tough, it's difficult to trade because you're bored out of your fucking mind. And the last thing you want to be doing is drop your focus. It's easy to open up Facebook and start chatting with people, but then you're going to end up missing trades. So Japanese yen here, 730 at the numbers. Then you got delta scalper giving a buy here. So kind of short-lived up here. The next bar or two starts coming back down. You get this stacked imbalance sort of in the middle of this area you've just been trading around again. Does this one work? Yeah, this one works out. Delta scalper giving a buy here after they hit this swing low. Next bar up, and then you just sort of go sideways in here. Again, it's encouraging over the next two bars, but then you get run into red bar, point of control right at the top here, price rejector there. So it's telling you it's not going to be very effective anymore after that. Again, look for signs once you're in a trade that, in the order flow, you're seeing some bearish signs up in here and over these two red bars that the market's not moving. Again, if you're still in this trade, by the time it's out here, you shouldn't be. It's more negative than positive at this point in this last bar here. Anyway, delta scalper gives a buy, but it's on a red candle, so I'm not interested in taking that as a trade. Sell off into new lows, boom. Some stops start going off down in here late in the day, boom, boom, boom. You get down here, divergence, no ratio. It's close, it's 0.7041. Would I be interested? I mean, I don't know. I know the market just got hammered right here, just got pounded. 1326 is this bar, this bar, this bar, this bar, this bar, this bar. I'm probably not, to me this is just a quick bounce. You come back a little bit later, get another divergence, then you close for the day. So again, not much there other than the delta scalper. The soybeans also, again, not much. Very quiet day all around. I mean, maybe you did have some decent movements, but there wasn't much clues in the order flow today, because to me, when you don't get stuff in the order flow, it's just the market doing what it's supposed to do. It's facilitating the trade. Simple as that. I mean, that's why the markets exist. They don't exist so people can scalp them or day trade or anything like that. No, they exist so people to transfer risks, transfer their risk, and the farmer can transfer his risk to someone else, lock in his price, and things like that. So anyway, 8:30 is the reopen. We're up here near our highs. Boom, boom, boom. We come down here. You got a few things. You got delta scalper giving a buy. Yeah, okay. Doesn't do anything. Just goes sideways. Another buy here, but on a red candle. Point of control right on the bottom of this bar. You got a nice bullish ratio. Does it rally? Yeah, it rallies over the next bar or two. You do have the delta scalper giving a buy here, but we just come down, make a new low by one tick only, and then we start rallying back all the way up to new highs. So again, this was kind of difficult. I hate it when it comes down, makes a new low by a tick, and then makes that rally. I hate those cheap ticks. Those where ticks lower by a tick. You get up here, you got a ratio of 2, but you got a single print. You've got divergence, but again, I really wouldn't be looking to get short at that time, even though it's almost, it's about a 9-cent range. It's kind of small actually in the beans. Then later we start coming off from this high, but here delta scalper buy, but the market's closing in about a minute. Then it closed. What else? For what it's worth, meal, but it's right on the reopen. You had a ratio, and I say ratio, it's a zero print and a divergence, and then you came off here. This was a nice little buy here. Again, meal is something I've been. I used to trade a lot actually. After I left JP Morgan, that's what I traded for about 6 months. Was meal. Meal is a decent contract. It's $10 a tick. And some days you get $10 moves, so that's $1,000. So if you just make one handle, two handles, that's already $100, $200 on one lot. So if you're trading 3 lots, that's about it could be $500, which is decent. It's a nice contract, and sometimes it's a bit jagged, but sometimes it's quite smooth. Like here, you hit this low, the small delta is coming into this low 8. It is a ratio. It's a divergence, no ratio. Next bar, delta scalper kicks in. Boom, you get a nice rally up here to the high. You got some trap traders up here on the high. That's what this red arrow is. And, you know, you sell back off. You know, today's, it's usually in summer times, you know, I'll say activity, but interest in this contract really picks up. It was a slow day today because I said, you know, it's a Muslim holiday, I believe, in Asia. I'm in the Philippines, but Philippines is not Asian. I do know palm oil is closed Monday and Tuesday because of, I think it's Hari Raya. And I know I was watching TV here, and you got some, you know, the TV stations out here in Singapore and Malaysia, when it's a religious holiday, they'll say this Hari Raya special programming, and so I heard that. Crude oil. Let's look at crude real quick. Crude, again, yeah, not a whole lot as far as ratios and divergences. This is starting at 7 this morning. Yeah, you hit your low here. This red line is the low. No ratio, no divergence, no ratios. Here you got the delta scalper kicking in over the next couple bars. You know, it does trade a little bit higher, but it's not really going anywhere on you. And then it sort of comes back down. We're sort of hanging around that yellow-orange opening price line. Come down, new lows, another divergence, but no ratio in the next bar. You just hang around here, still hanging around that open. Boom, start hitting down into the new lows. Some selling imbalances. Boom, boom, boom. 1, 2, 3, 4, 5, 6. Into these bars, you know, all negative deltas. I don't have the delta surge on here, but this is the delta surge would have kicked off in here. I could just, I don't need it because I could read it, but I do put it on some of my charts because whatever the template has it on there. Come down in here at the low, still negative delta. Start rallying, you got positive delta. But again, nothing in that order flow really to get too excited about. I thought this was interesting. You know, you're just sort of hanging around here. You're sort of getting some smallish deltas, 90, 200, 200. Although you got this buying imbalance. You know, I like buying imbalances off lows, honestly. It does occur right at the top of the bar. You know, people ask me, does it matter where a buying imbalance appears? You know, if it appears in the top of a bar, in the middle of a bar, the bottom of the bar. Generally, no. It doesn't have any relevance. I haven't found it, at least. However, when it appears on the top of a bar, especially in a range bar, because, you know, the bar is going to close and form a new bar when you get outside the range, right? And sometimes what you run into with range bars is when they occur right on the top of a green bar or right on the bottom of a red bar, is the market's moving. There's just not enough volume in there, you know, up here. People want to buy it, but in this bar at this time, there's just not necessarily enough volume. And then you close and you're left with this open, basically, I'll say open, but you're left with this imbalance because you don't have a chance to come back in this bar. It says, you know, people wanted to buy it up an extra tick, but there's just no volume there for them to buy. So it came back down in the next bar. Then you get this stacked imbalance here, you know, which I find bearish. Come down here, some very strong volume here, 11.99, you know, support, get through it, rally back up, delta scalper giving a buy here, and finally you got some decent movement off the lows. But again, you know, at this time in here, it's not giving you any big signs. You got small deltas, 4, 60, 11, 98. You're going sideways in here, okay? But I do know there is some support. There's some decent volume down here, you know, at this level at 68, I think it was 69. You know, you got about 2,500 lots traded there, almost. So I do know there's some support down. There was some, you know, we got through it, rallied back up. Even over the next couple of prices, you know, here's about 2,500. Here's another 1,500. Here's another 1,000, another 1,000, another 1,400. So, you know, it's quite decent down there. And then, you know, you just hit this area. The market's trying to decide which way we're going. Point of controls in these bars all lining up. Again, you know, watch when you come out of an area like this. You know, watch what point of controls are doing. If they're going higher or they're going lower. In this case, they're going higher. Watch the deltas. Delta's picking up 98, 163. I'll say it's picking up at 98, but you know, you sort of got these, you know, in these four bars, 4, 60, 11, 98. It's kind of small. Then 163. Yeah, okay, I'm not convinced yet. But boom, 800. Shit, buying's coming in. You know, you know, when you see 800 like that, shit, you know, your ears should prick up and think, what the fuck's about to happen? Next bar strong, 700. Next bar strong, 600. Okay, then you get negative. You got some selling. Okay, that's fine. I'm not thinking this move is over because you got to borrow with negative delta. But you know, at the same time, you could read this negative delta. Well, okay, why do I got negative delta? Well, I got some very supportive buying in here, 1200. So I know people are selling into these bids, and there's strong bidders there. So instead of reading this as a negative, I'm reading this as a positive for the market. So you start coming out of this area, right, with the small deltas. You're looking at it, yeah. Really, you're sitting here now. This is the time where you got your phone out and you're scrolling through Facebook. You know, 460, 11, 98, and 163. Yeah, okay. Oh shit, 800. Let me pay attention. Boom, 700. Buy-ins coming in. Okay, 600. You know, at this point, if you're not convinced buy-ins coming in, you're really not applying yourself. You know what you know with order flow, and you know, so even if you get in here late at you know, $43, you know, there's still capacity. This market keeps going higher. Gets all the way up to about 43.50 before it sort of stables out again. Goes sideways and then starts, you know, getting ready to, I'll say, close for the day. But, you know, you're really just jumping around. This was the move, right? This was the move here. And the signs were here. You're coming out of this area of, oops, it's back here. You got this area with small deltas. You got this area where people are trading back and forth, sort of, I don't want to say absorption, but or consolidation, but you know, that's where moves come out of. They come out of areas of absorption. They come out of areas of congestion, right? That's where moves come out of. So, you know, it's easy to get bored and sit here and think, oh, we're not doing anything. You know, point of controls are all lined up. But watch what happens when you come out. That's where the money's going to be made. And you know, it was there. It was there for you to pick up off the ground. You know, anyway, so later in the day, you know, after 1 o'clock, you know, Delta Scalper gives a buy here. Yeah, it's already 1:15 here. It's 3 o'clock. You know, honestly, I'm not a big fan of trading crude going into the afternoon. The best time, the sweet spot to me, is from you know, basically 5 a.m. until about 1 p.m. Yeah, I know people that like to look at rig numbers and all that stuff, which come out later, but I'm not that hardcore on crude. So anyway, you know, I hope this this presentation was useful, and maybe you picked up something out of it, maybe not, I don't know. But to learn more about trading software I use in this presentation, which is my Orderflows trader software, visit orderflows with an s.com. Learn more about Delta Scalper, go to deltascalper.com. So thanks everyone, and I'll catch you tomorrow. Bye bye.